Let's go to business now. Nona Peltier is in the studio. Nona, so 4 of the country's biggest companies and carbon emitters are getting together to buy and grow forests. Should we have a go at guessing those 4 companies?
Well, yeah, let's do it. Okay,
You tell us.
I won't keep you guessing. I'll tell you it's Genesis.
Right.
And that's a power retailer.
Yep.
It's also Genesis Contact is another one. It's the biggest one. They use they have coal-fired generators.
Right. So 2 power companies.
And gas generators, rather. And we also have Air New Zealand, which is a fuel user, and obviously Z Energy, which supplies fuel.
Okay.
So those 4 are going to get together. They've set up a company called Dryland Carbon. And what it is basically is they're going to go around buying up or planting on marginal land. So this is land that can't be used for farming or other purposes. And they're going to plant it up with trees which are going to be ones that would take up a lot of carbon as to offset their use. So as time goes by, the price of carbon will be offset with the trees that they plant. And it complements the government's plan to plant about 1 billion trees.
And they're going to fund all of that themselves?
Yeah, they're going to do the whole thing themselves. So there is funding available, but these guys don't need it. They've got lots of money.
All right, there's been an independent report into the dairy sector. Now, interestingly, this has shown that Fonterra has one of the worst returns on investment in the industry. What exactly is it saying about them?
Yeah, it's interesting. So this is a report that looks at the whole of the picture, and they're saying that basically Fonterra has offered, a really poor return on investment for shareholders, and that would be, people who invested in the fund, which is people that aren't farmers, as well as farmers. So over the past 5 years, their return on capital has been 6%. And when you look at over the market as a whole, it's less than 1/3 of the best performer, and that's in the dairy sector. So they've, big company with a poor return. It's not great news, but not also very surprising. Fonterra, we know, made a loss in their last full year result. They've said that they've underperformed. They've got a new executive team in place, and they are promising to turn things around. The report suggests that their plans to turn things around are right on target. So in that sense, the report was positive for Fonterra. It said, it pointed to the mistakes it's made in the past and saying, hey, better times ahead potentially for that company.
No pressure on the new guy then.
No pressure at all. In fact, they're going to be reporting their half-year result next Wednesday.
So what about the rest of the market?
Yeah, okay, so we ended up 0.5%, which is pretty good because the rest of the market is looking fairly sluggish and just biding their time, wondering what's going on with Brexit and all the other stuff that's happening. So we ended up 0.5%, 48 points up to 9,436. So we outperformed the region. I mean, the ASX was flat, and in some markets it was actually down. Our dollar is holding steady as well at 68.4 US cents, and still strong against that Australian dollar at 96.8 and 51.6 pence. Now, the pence improved with the no Brexit deal, the bizarre.
The swings and roundabouts of Brexit.
At the moment, it's doing better. So there you go.
Thanks, Nona. Nona Peltier with Business.